everyone, and welcome to another episode of What's the Word of the Jungle. My name is Neo with my trusted guerrilla market scout Goma, and together we're going to bring you the word of the jungle in a simple, beginner-friendly way for you to understand. So let's get started. Like I said, Goma came down and he's not smiling. Why? Because since Monday the jungle has been loud. The dollar is flexing again, roaring back again, starting climbing back up again. And at the same time, putting the pressure on gold. Gold is sweating, it feels the pressure. And on top of all that, oil, it's back into the mix and it's causing drama, inflation fears, so on and so forth. And let's not forget that Thursday, the US job report would come out, the NFP. That could bring a lot of volatility and shake the market. Now, for those of you who don't know what's the NFP, it stands for non-farm payroll, and more or less it counts the number of vacancies or the number of jobs that were available for the previous month. It's a solid indicator of how well the economy is doing. Okay? For more about the NFP and interest rate and every other financial term and data release, make sure you visit my section, CFD Trading, Learning CFD Trading for Beginners. It's gonna come up soon on my channel. Once it does, make sure you visit it, especially if you're a new trader and you want to get a really good solid foundation in CFD trading or in trading in general with the simplest way possible. So let's keep moving. So today on the World of the Jungle, like I said, we're going to break down in a simple language, simple way for you to understand what happened, why it happened, and what beginners CFD traders, as well as CFD traders that have some kind of experience but they want to learn more. So let's start with first and foremost the US dollar, the king currency, the number one reserve currency in the world. So with the dollar, why did it start climbing up again? Because since Monday, the US dollar is trying to act, or it's staying strong, because traders are watching the FOMC, the Federal Reserve. Now again, for beginners, the Federal Reserve or the FOMC stands for Federal Open Market Committee. It is the deciding body of the central bank of the US, in the simplest way for you to understand. And when inflation kicks in, what do I mean by that kicks in? Rises, okay? Increases. It causes a problem. The Feds step in and they increase the interest rate, okay? And why does that matter? Because higher interest rate can make the dollar more attractive to traders and investors. Think of it like this. If the dollar is paying better returns because interest rate is high, investors do prefer to hold dollar instead of any other asset. And especially gold, because gold is a safe haven. What does that mean? A safe haven asset, it's an asset used or preferred from traders and investors in times of uncertainty. When things are not clear, when there is geopolitical factors or some kind of disaster, traders switch automatically to gold. It's a solid investment. So when traders believe that the Feds may stay tough, the dollar usually gets support, becomes more attractive, and that is why the dollar is flexing in the jungle. Now, you might say, why, if there is uncertainty in the market, the dollar is gaining and gold is losing? Why? Okay, now, think of it this way. Gold does not pay you interest rate. No matter how much you hold into reserve, it doesn't pay you back interest rate for holding it, whereas the dollar does. So that's the reason that dollar is climbing, because traders and investors say, all right, gold, it's a solid investment, okay, it's good to have, but then again, at the time, it doesn't pay me back interest rate. Either way, I'm going to keep hold on the safety deposit box. So why not use dollar? So there you go. That's the simplest explanation to understand why traders, when they see the interest rate from the Feds about to rise, they turn into gold. So again, let's go back. The dollar is flexing, gaining, and gold is sweating. Okay, we explained the way. If there's a possible interest rate hike, traders are trying to supply themselves with as much as dollar as possible because, like I said, they keep it into the bank, they gain interest, and at the same time, dollar becomes more attractive to foreign investors as well. So it's a good, I wouldn't say good chance, but it's good to keep it in reserve, to have availability for yourself. So, with that being said, why the dollar is climbing, why gold is feeling the pressure, let's talk about oil. Oil is back in the mix, causing drama into the markets. And why is that? Because traders are watching US and Iran tension. Recently, they signed or they agreed on some kind of peace treaty, soothing down things, calming down. However, that did not hold too much for too long. And again, you might say, okay, so the tension between those two, it's not clear yet. Why oil, again, it's into the mix? Because there's a place called the Strait of Hormuz, and oil producing countries are using that Strait of Hormuz to supply oil. Now imagine if that route, if that place, if that road, however you want to call it, is disrupted, oil supply falls down. Now, there is demand for oil. Please don't forget that. It's a major source of energy. Without oil, we cannot move ahead, we cannot produce, so on and so forth. So, we need oil. But in order for us to get oil, it has to go through a certain route. Now, that route is not that available. So producing nations, have to find other ways. Now that other way, it's costing more. So that increase in price of delivering oil, it's passed on to the consumer, and oil price started rising again. But with that, it pushes inflation because the increase of that asset, the increase of price of that asset, at some point again, it has to be passed onto the consumers, and that's why we start seeing inflation rising again. And to make it more simple, things get more expensive again. So oil is back on the mix because of the tension of US-Iran through the Strait of Hormuz, the supply route. That's again, it's not the safest, and oil-producing countries have to find other routes. Those other routes are more expensive. How do I know they're more expensive? All right, so think of it this way. Here is my cup of coffee. My cup of coffee has to go through this road. That road now has, some pebbles and stones that make it here. I'll make it like this. Makes it more difficult for it to pass, so it has to fly over or go around the treetops, which makes it more expensive. Longer path. However, you can understand it. However you want to look at it, it makes that delivery more expensive. And with that being more expensive, that increase in price has to be passed on the consumer. The consumer has to pay it. And again, prices will rise, inflation will rise, so on and so forth. So oil is not just, some kind of black liquid that you use it to pump gas into your car or fire up your factory to make whatever you want to make, It's tied up to a lot of things. And in this case, it's tied up to inflation, making things more expensive. So energy becomes more expensive, production more expensive, and then when cost rises, as we said, inflation becomes a problem again. Now here is where everything gets connected. If oil pushes inflation fears higher, the Feds may feel the pressure to keep the interest rate high. And as I said, or I'm reminding you, recently, members of the FOMC, of the Federal Market Committee, gave hints. They were hawkish on a speech and said, maybe we're gonna have an interest rate hike, an increase on the interest rate, not just once before the end of the year, but maybe twice. And with that being said, as I said before, it would attract investors and traders and even foreign investors to acquire more US dollar. So again, oil goes up, inflation fears goes up. The Fed see the pressure coming out, The dollar gets support, gold feels the pressure, and this is it. Now, for you to know and understand what's the next move, the possible next move, if you are a beginner trader. Thursday, the US job report, the NFP, comes out. What is that? More or less, not more or less, it shows the number of job vacancies recorded for the previous month, which means if the number is higher than expected, the economy is moving forward. Inflation is there, but it's not affecting so much, okay? And the Feds, again, feel an extra pressure on that, and they will be forced to increase the interest rate sooner than later, or maybe more than once. Like I said, members of the FOMC gave out signals or gave out hints that there's going to be more than one too. Maybe with that NFP report, it might up, and maybe we'll concede 3. But that's a maybe. It's not a definite. So, like I said, Thursday, the US job report. This report is important because, again, it tells traders if the US economy is still strong. And if the job number comes out strong, traders might think the economy is still holding. And if the economy is still strong while inflation is still a problem, the Feds would have more than just one reason to raise the interest rate, and more than just once. So that, again, could support the dollar, maybe push it even higher, and at the same time put on the pressure on gold to decrease its price. However, if the job numbers come out weak, traders would start thinking, okay, so maybe the economy is slowing down. Let me repeat that. If the job market report does not come out as strong as expected or weaker, the traders would start thinking, so, okay, the economy is slowing down. So, the dollar could cool off, okay? Would stop its roaring up again, would stay still, or maybe start selling, okay? Which means at the same time, gold might start gaining, and let's not forget currency trading. When one currency goes weak, and since the US dollar is a major currency and it's paired off with another 7, 8 other major currencies, and we'll have 7 major currency pairs, you can trade against the dollar. You can trade. This is not an advice, it's something to look out for and decipher what to do. So I'm gonna repeat this. This is not an investment advice. It's letting you guys know if that happens, this could happen, and you decide what to do. Okay, so again, going back, if the NFP does not come out strong, traders and investors might think maybe the economy is slowing down. Then the dollar could cool off, and then gold might get some relief from the pressure. Now for oil, traders will continue watch the Middle East headlines, tension, what's going on with the Strait of Hormuz, that pathway for oil supply. And with this, we'll kind of wrap that up, give you the word from the jungle. So, final thoughts. Do not just watch the price. Watch the reason behind the prices as I explained it. The dollar is watching the Fed. Gold is watching the dollar and interest rate, and oil is watching geopolitical supply fears. In other words, what's happening between that Strait of Hormuz, that supply route, the US-Iran tension, and all of them are connected through inflation. And that is how you beginner traders or traders with not enough experience should start reading the market. Not by guessing, not by chasing candles and trends, not by asking, by trying to figure out what's moving the market, what's the reason behind it, okay? Like I said before, I'm not giving you guys investment advice, I'm explaining things to you, okay? And you guys have to sit down, understanding your way, how the market moves, what you can trade, and when you can trade. So, thank you for watching this simple, in my opinion, and I think it's very simple, word of the jungle. By all means, feel free to contact me with questions of what I just said on the video, okay? Do not ask me investment advice, or do not ask me what it's gonna happen, because I'm not gonna answer to you that. That qualifies for investment advice, and I do not want to tell people how to trade and do their own, handle their own money. Thank you for watching. That was the word of the jungle from me and Goma. I will see you soon next week. Make sure you follow Neo's Knowledge 75. Pretty soon, I'm gonna have a separate section, CFD trading made easy by Neo. Once again, this is Neo and Goma. Thank you for watching. We'll see you in the next one. Bye-bye.